I think Ferris Bueller said it best when he said, gold and silver move pretty fast. If you don't stop and look around once in a while, you could miss it. I think that's how it went. Well, if you haven't been excited about gold and silver lately, this week probably pulled you back in because the Fed lowering their rates and signaling a more dovish outlook ahead, well, gave exactly the reaction you'd expect. Gold and silver both moved up. Gold pushed back above $4,300. Silver hit a new all-time high above $64. Now, it was enough to see some profit taking. Silver moved back down to $61, but these are big moves, and what we all want to know now is how high will they go? Gold doubled in price in under 2 years, silver doubled in less than 1. And what everyone wants to know is, will they double again before we see a top? That last part is important because on a long enough timeline, yeah, sure, they will double. But the real question is whether they can do that before something slows them down. And something to point out here, even though we just saw gold and silver climb together on the Fed rate decision, the primary factors driving the two are very different. And that difference only gets more interesting from here. We're going to get into that further, but before we do, quick shout out to Summit Metals. If you're looking for gold and silver, they've got you covered. If you're looking to sell your gold and silver, they can help you there too. SummitMetals.com. Now, to understand where all of this is going, we need to start with where prices were when this move actually took off. So not this week. We're going to go back to January of 2024. And we can see gold price was right around $2,060. And then a year later, January of 2025, it was $2,624. That was a 28% jump. And today, gold is right around $4,300, which means gold more than doubled in under 2 years. Now, the gold rally isn't new, but as we just saw in the chart, it is accelerating. Enough so that you have to wonder if it can keep this up. Well, to make this more than my personal opinion, we should look at the institutional view, and we have plenty of that out there. Gold is exciting all of a sudden. Well, analysts at Goldman Sachs are saying what we're all thinking. This is not a short-term spike, but they're also not talking about a straight line up. Now, if we want these predictions to be useful, we have to look at what's actually driving them. Goldman Sachs points to higher central bank demand since 2022 when countries saw just how easy it was to freeze Russian assets. So that central bank demand is now a signal. As long as central bank buying stays strong, we continue the climb, at least as long as it's not offset by something like higher real rates or a stronger dollar. Now, another thing that a lot of these predictions point to is that private investor interest in gold is still relatively low, which means what we've seen so far hasn't been driven by broad retail participation. Their words, obviously not mine. In other words here, we got here without retail frenzy, and gold has a lot more room to run if it joins in. Now, silver definitely has retail investor interest as a factor, but it doesn't have the same structural support that gold does from central bank demand. This is where the two deviate. Gold has been moving for structural reasons, central banks, reserve diversification, long-term allocation. Silver is different. It has a much thinner market, which means retail investor interest is a much bigger driver of price, and small shifts in that buying and selling behavior can move the price much faster. So let's get our chart back in here to show what that actually looks like. This is silver, gold, the Dow, and the S&P 500. What we just saw silver do this past month has only happened a handful of times since the late 1960s. At its recent peak, silver rose by about 20% in the last 30 days. That's big. And at this point, price itself becomes the driver. This is the feedback loop that we've talked about, where price movement attracts attention, leading to increased inflows that then lead to more price movement. That's the loop. That is why silver can run from $60 to $70 or $80 or even more a lot faster than most people expect. Now, I know we're getting tired of looking at this chart, but we need to look at gold and silver compared to the S&P 500 and the Dow. This isn't to call winners here, but we can see that gold has done extremely well at a time the S&P and the Dow are also up. That's notable. Now, silver started later, but it moved a lot faster once it got going. And as a side note here, and only because Bitcoin is perpetually mentioned in the comments, Bitcoin had a great 2024. It more than doubled as well, up to 120%. And then it had a terrible 2025, so it's currently down 3.5% year to date. Now, this is all really good groundwork showing us where we are and also showing us how much ground these rallies have already covered. So let's zoom out. We like to talk about where prices go from here. Can gold double to 8,500 or 10,000? Can silver run to 100 or 150? That is peak speculation. And it's also a little bit of peak nonsense because on a long enough timeline, both metals will probably hit any reasonable number that we can imagine up. The timeline is the only debatable part there. The better question right now is what would stop the current rally? So if we want to know what to look for before it's already happened, it's different for each metal. For gold, the answer is pretty clear. This rally is about to cool off if central bank buying slows or it flips to net selling, or if financial conditions tighten in any real way. So a stronger dollar, higher real rates, or some kind of shift in reserve policy. Now, those are all likely headwinds for gold. Those are things we can watch for, and they're a lot more direct factors than simply waiting for a gold to silver ratio to flip. Because by the time you reach a specific ratio, that rotation will have already happened. Now you watch the events, you have some lead time knowing that unless those factors change in a meaningful way, the gold story stays the same. If you want to get ahead of it even further than that and stay grounded in realistic timelines, you can consider some of these analyst predictions. They're looking at these actual factors, they're running forecasting against them. And for what it's worth, analysts aren't calling for gold to double in 2026. You have Goldman Sachs saying $4,900 by the end of 2026. Bank of America has talked about $5,000. Morgan Stanley has been around $4,400 in 2026. So if you're hearing $8,500 or $10,000, that isn't a forecast. It's a story that will probably prove accurate if we use a long enough timeline, but it's not supported by near-term data. Now, for silver, the factor that we're looking for is different. There are a lot of things driving the base case for silver, like industrial demand and tight supply, but the wild moves that we're seeing right now have a lot more to do with trading activity. Now, this is in a market that's about 1/10 the size of gold's. In practice, we're talking about rising prices, attracting more buying. More buying pushes prices higher. That's the momentum. And if that buying slows and the price stops making these new highs, well, the feedback loop short circuits. So you can see things a little bit earlier by watching how fast dips get bought and whether price keeps setting new all-time highs. Now, it's hard to keep the silver predictions grounded. $150 silver is the one that I keep seeing pop up. And on a long enough timeline, again, sure, but the momentum tells us how soon. Now, the fundamental case for silver supports much higher prices. I think we'd all agree with that, but there are practical constraints here. Silver is still an industrial material, and for it to be used in manufacturing, the price has to allow it. At some point, price destroys demand. Now, when price starts pushing back against industrial demand, that pressure shows up first in trading activity, and that's when momentum can start to fade. Now, these aren't simple signals like a GSR hitting 50 or 40 or whatever your number is, but if you watch the drivers themselves, you can see shifts starting to form before they show up in a ratio. And because we brought in analyst predictions and big bank forecasts for gold, let's bring some in for silver here as well, because I think this will probably surprise some people. Most bank and institutional forecasts call for $50 to $65 silver in 2026. It feels like we're already past that, but here we are in December, I guess. UBS, Citigroup, and HSBC are at the low end of that range. Bank of America says $65, possibly low 70s, and not one single serious triple-digit forecast from any of these analysts. Now, does that mean it won't happen? No, they're being conservative. What they're not pointing to is the possible momentum that you could see from a feedback loop. Now, the reason that I don't give silver predictions much credit is that they're built on practical factors like industrial demand and supply. They don't factor in what happens if we see retail buying frenzy. So when I say $60 silver can quickly become $80 silver, it's because the fundamentals get you to 60 and trading momentum takes it from there. Now, analysts, they don't model momentum. Now, to be clear, I'm not saying they're wrong. This whole thing was just about one thing, whether gold and silver can continue the rallies, doubling again before hitting a top. So here's a clean way to think about this. If you want to know if gold still has upward momentum, watch central bank buying, real rates, watch the dollar. Those are the drivers. If you want to know if silver has momentum ahead of it, you're literally watching its momentum. You're watching trading volume, open interest, and how fast pullbacks are being bought. Now, we just saw big profit taking on Friday. How fast silver reclaims that $65 all-time high is something to watch for. Now, what you're looking for is participation. So high volume with price continuing to climb. When that participation stays high, but we stop seeing these new all-time highs, that's when the feedback loop is breaking down. That's when the price rally is probably looking for a reset. Now, this is why watching for a specific gold to silver ratio can be dangerous. All of this can happen regardless of where that ratio is. And let's call it good there. I don't know which is more fun to watch right now, silver or gold. I just know that I'm a lot more interested personally in the long-term price of gold. The fun with silver comes with its volatility, and some people just don't find that fun. So let us know what you think. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.